Today in this video we are going to break down how to use key levels, pit numbers, and moving averages, how to properly gauge the market conditions, and then navigate in the market in a way that breeds you to consistent profitability, right? See, for the longest time I traded with tunnel vision, anxiety, no conviction, no confidence, right? And in my online course, Trader Bootcamp, the one sole purpose is to get you to the point where you trade with confidence, control, and conviction, right? So for trading for 5 years, constantly logging my trades, diving into my losses, and really getting and becoming self-critical, I found that trading with the pit numbers has literally helped me navigate in and out of this market like no other, right? So today in this lesson, we're going to be breaking down September 20th, 2024, QQQ, right, and the trades that we took and how we were able to identify our edge. See, one of the key things I'm always talking about is building a repeatable approach, right? Until you develop a consistent, repeatable approach that's actually effective, you're not going to get the results that you want to get in the market, right? So for the longest time, every single day, I would kind of just hope and be like, oh man, I hope I have a great day today. Hopefully the market gives me great price action. Hopefully, like, stop hoping. Instead, develop a simple, repeatable approach that helps you get in and out of the market with confidence, control, and conviction, right? See, if you don't have those 3 C's, you're never going to be able to become the trader that you want to become. And it's not easy to develop those 3 C's. It literally takes a lot of time. It takes a lot of pain. It takes a lot of suffering. You're going to lose a lot of money. But the harder and more focused you become, the better chance you have of actually becoming that trader, right? So through my 6 years of trading, through all that logging, I've literally now come to the point where this is my approach. So I'm going to package this in this video, and I hope you guys enjoy it, right? So basically, in a nutshell, how I approach the market every single day is I identify my critical levels, my pit numbers. This previous day high. This is the highest price from the previous day. This is end of day, right? This is the closing bell price, right at 4 o'clock Eastern, right? And then previous day low. That's the lowest price from the previous day. See, these are the 3 levels. And then we also identify open print that shows up at 9:30. We'll get into that, right? So now that we have our 4 main critical levels, you're going to see here I also have a key level here, right? This is previous day high, because guys, you got to think about it. We are intraday day traders. We trade in between the hours of 9:30 and 4. So we have to capture a move in between that time. So we have to be able to understand the market on a larger time frame. What do we use? The 1 hour, the 4 hour, and the daily time frame. I really like to use that daily time frame, and let's whip it out and I'll show you why it is I use it, right? Because my approach every single day is very simple, right? I call it the 50-50 perspective. See, unless you approach the market this way, you will form a bias, and that bias will hurt you. It will not allow you to see the market objectively. You cannot have a bias. It is my goal every single day to do one thing, and that's not have a bias. If I'm not biased, that means I can identify the market objectively in flow state with I'm not trying to see anything. I'm allowing the market to speak to me, right? And how we do that is identifying a bullish and bearish scenario. See, it doesn't matter how much the price is ripping in pre-market. It doesn't matter how bullish the market is. I will always identify a bullish and bearish scenario, right? So going into this day, I had my critical levels, PDH, PDL, EOD, and then I had previous PDH, right, which was the previous day's high, because in a bearish scenario, pre-market low will not hold, previous day low will not hold, and then we'll sell off to that level. Then in a bullish scenario, previous day high will not hold, and then we will rip up to 489, right? So look, it's really cool because you could see how price reacted to this 48. What is this? This is 486. This 486 level was a critical level from the daily time frame. This is what we call a supply zone. In this level, there is larger amounts of supply, which causes price to go into it and sell off, right? This is an auction. For every buyer, there's a seller. But in very large areas of supply, where there's more supply for the commodity, the price is going to sell off. And it's the exact opposite for demand, right? So price literally ripped into 485. So now going into this day, I'm now going, okay, Now that I have a more better understanding, right? I have my bullish and bearish scenario. There's two things that are going to happen today, right? We are below end of day and pre-market. Now, if buyers can get price above EOD, right, we have this very large imbalance up to previous day high, right? So my bullish scenario would be buying acceptance above end of day. This means buyers showing strength at open print. This means healthy structure. This means healthy moving averages, right? I need that healthy trend, that break, that retest, right? But my bearish scenario is if sellers control end of day, we are then going to get a move down to previous day low, and then if previous day low can't hold, we're going to use that daily time frame level and then get a sell-off down to 479. So see how I approach the market, right? It's never one-sided. It's not, oh man, we've been ripping lately, we're going to rip today. No, not at all. It's whoever controls end of day in this scenario and open print, I'm then going to trade accordingly, right? It's a top-down approach. All right, so now the market opens. Market opens. Look at how price rallies right into EOD, and then we get tons of really, candles ripping into end of day. We get a wick here, wick here, wick here, wick here, right? So obviously there's a clear seller there, right? And then we fall below open print, and we come up, and now notice here. We have end of day. We have open print, right? Literally about $1.50 apart from each other. That's what I call a sweet spot, right? Whoever controls that spot is going to show us a lot of strength, right? And just bring it back real quick. The reason why I'm watching these levels so critically is because the amount of volume that goes into these levels. Pit numbers have immense amounts of liquidity, so whoever can show us via chart pattern, via break and retest, whoever can control these levels, this sweet spot, I'm then going to look to trade with, right? So look at how price rips in the end of day, falls below open print, and more importantly, falls below this purple dotted line. This is the 50 EMA. This is a very important tool. This tool will literally help you understand who is in control of the market. Now, does it work every single time? Absolutely not. There is no indicator or nothing, no tool, no anything in this market that works 100% of the time. Instead, it's not our job to find something that works all the way. It's our job to find something that helps us trade and get in and out of the market with a higher probability of one thing happening over another. So I use the 50 EMA to identify weakness. I use the EMA cloud to identify weakness or strength, right? If we fall below open print and now we come up into the EMA cloud, we come up into the 50 EMA, it only makes sense to take the market short here, targeting previous day low. Now that was the first trade that we took. We took it on SPY, right? But I don't have that much time to break into that trade. I want to talk about the second trade, right? But that was our first trade. Price ripped into the 50, ripped into open print. We took the market short, targeting the next imbalance, right? So by the time we got out of that trade, we were now watching QQQ, right? So now I'm going to whip out the 2-minute time frame, right? So if I whip out the 2-minute, I'm going to show you exactly where it is we got in the market and then where we got out of the market and what we were looking at. So now that sellers now that sellers showed a lot of strength at EOD, at open print, right? The market looks something like this, right? So now we ended up taking the market short on this candle right here, right? And I posted this because we did it live on Discord, and I always film our lives. So I posted it. So if you want to watch this trade, check out the video below, right? So what I was looking at here, right? Because I'm not trading off a critical level, right? I'm literally in between open print and previous day low, right? What I'm doing here is identifying a bearish scenario and asking myself, how can I get into this trade with low risk? How can I still use the bearish understanding, right? The bearish scenario to capitalize on a trade. Just because it's not off a critical level doesn't mean I can't take the trade, right? If I have a proper understanding of who is in control of price, who is in control of the day, I can then understand, okay, if sellers break low of day here, that's a strong signal that sellers are in control. I could take price down to PDL. I could take price down to 47889, right? So look at how price sold off below the 50, respecting the EMA cloud, right? And then this right here is what really helped me make the next move, right? So right here, this pre-market level. I'm trying to understand who is in control. Sellers are showing a lot of strength. And then I use the infamous GBI, right? So once price creates a green bar, right? Bam, right there. I'm looking for sellers to break that green bar. I want to see them ignore the buyers that were there, right? Price literally sells off about 20 cents below this previous candle. That right there is enough for me to go, okay, I'm going to enter the market short here, and my stop loss is going to be above the green bar. See, that's what makes this strategy so effective, right? I teach all my clients this strategy. I constantly jam it down everyone's throat because it's so effective, but it's only effective for one reason: the risk. The risk on these trades is so tight. We're literally always risking one candle, right? We do not like to risk any more than we have to, right? Because to become consistent in this game, your one job is to manage risk, right? So when I identify a green bar that's just been ignored, I've identified sellers at EOD, I've identified the weakness at open print, we're playing that bearish scenario on the larger time frame that if sellers take control of this, there's a very high chance of price revisiting 47889. What do I need to see to play that story? That's it right there. We're coming into low of day, right? And sellers are showing a lot of strength. We take the market short, and our stop is going to be right above that green candle. Boom. Price starts to sell off. Now what we do is we identify the next GBI. And what's really cool, right? Because obviously a lot of traders struggle with holding on to positions. Use this tool. Use your knowledge of the green bar ignored, red bar ignored, to then understand, okay, I might be in a short play and there might be a green bar right there, but it doesn't necessarily mean the trend is over. It could be another GBI because we literally then added into the trade on this GBI, right? So we got another GBI, price sold off below PDL, we scaled out some profit, right? Then price comes below previous day low, the critical level. Comes up, retest it. Then we get another GBI off it. Look at the green bar. That was completely ignored. We entered back into the market short. These ones were the 480 puts. And then we caught another beautiful move all the way down to our critical level. This was literally a 115% ROI trade, right? Where we obviously scaled out and added in between it, right? But guys, the purpose of this lesson was to help you understand the importance of actually trading the market story, understanding the conditions, using the larger time frame to form a 50-50 understanding of the market, and then trading accordingly, right? Hope you guys like this lesson. If you want to get involved with my team, we are literally running a special right now in Trader Bootcamp where any new trader that wants to get involved with HBT can sign up for Trader Bootcamp. Price has been reduced by 50%, right? You sign up for Trader Bootcamp, you get a year free access to the Discord and to the Army. I'm Joshua Salvetti. Hope you like this lesson. I'll see you in the next.